review. My name is Angelo Zitis, and this week's title is Can Gold Get to $2,000? Gold finished July performing its strongest monthly upward movement for the current year. The precious metal has managed to break above its all-time high price, last seen back in 2011, and is now trading nearby 1970. The question for most traders at the moment is whether gold can reach $2,000. Since it has already solidified its position as one of the most volatile instruments in the latest months. However, this report is aimed at reviewing some of the most important reasons driving the gold market at the moment, expressing our personal views at the same time. Looking at the global economy for a start, important financial releases from around the world tend to indicate that economies are in a much better position than they were some months back. The US, Europe, and China have shown considerable improvement in sectors like manufacturing, services, and consumer confidence, but the unemployment and economic activity has not returned to pre-pandemic levels yet. Despite the positive economic progress seen in the global economy, gold's price has continued to break higher, which indicates that risks could be also increasing at the same time. In our opinion, risks could be rising for two important reasons. First, risks may have risen as most governments were forced to print money to create or keep economic activity going. We are referring to all these stimulus packages that have been prepared, with possibly more to come. Even though unemployment has not been controlled, yet especially in the US, the stimulus packages have managed to bail out businesses, increase sales, and lift consumer spending. Yet the economic activity is based on a huge lending process that could be dangerous for the long run. Moreover, another scenario that could be keeping gold's price high and continue to do so for the rest of the year is the fear of a second COVID-19 outbreak. During the past weeks, some countries saw cases rising substantially. In our view, most economies cannot endure a second lockdown, as most of the economic ammunition from central banks has already been used. Thus, another lockdown could prove detrimental for any economy. Furthermore, despite the extensive effort by the general pharmaceutical sector around the world, an effective vaccine has not been found, which implies that the virus could continue to show its presence in the near future. So in our opinion, the virus still poses a great threat to humanity, and consumers' lifestyle could be influenced by these circumstances. Consequently, traders and portfolio managers could choose gold over other instruments for its traditional ability to hedge risks. Turning now to the USD. Due to its relation to the precious metal, the situation in the US has forced the currency in a continuous downward trend. Lower dollar value tends to support higher gold prices, yet the weakened currency could be working in favor of the economic recovery of the country, and so it could, in the interest of some large financial institutions or banks, continue to keep the currency low. Finally, during the current week, gold traders may be in for a treat, as the US employment report with the NFP figures are to be released on Friday the 7th of August in the US session. Caution is advised, as the event could have substantial market moving effects. Other important financial releases from the US include the ADP national employment, the international trade, and the ISM non-manufacturing figures coming out on the 5th of August. On the next day, the 6th of August, we get the weekly initial jobless claims figure, which is equally important. Also note the Bank of England interest rate decision comes out on the 6th of August, and this could prove a market mover for gold in case of any surprises. Moving now to our technical analysis, this is gold's 1-hour chart. Please note that during the past 2 weeks, gold has added approximately $150 in value, while it also moved higher for the past 8 consecutive weeks. In case the precious metal continues to rise, we could see it initially testing the R1 1975 resistance level, which is currently being tested. In any case higher, we have noted the R2 1985 resistance hurdle that was briefly tested yesterday, and it was the highest price reached all time. As a target, we have set the R3 2000 round number level, which could be reached in the ultimate buying momentum. Yet, due to the steep upward movement the metal has formed in the past weeks, Some traders could be interested in a move in the opposite direction, which is lower. In this case, the first level to be tested in our view could be the S1 1965 support level that was also tested but not breached yesterday. Lower, we have also noted the S2 1955 line, and even lower the S3 1945 hurdle. The RSI indicator below our 1 hour chart is running between the 70 and 30 level, implying a sideways momentum could be currently in place. That's the end of this report. We thank you very much for your time, and we'll see you next week.